Good afternoon, ladies and gentlemen. It is May 27th, and you're watching the Stock Market Brief Show. I hope you enjoyed the extended holiday break, getting away from the screens for a little bit. In today's video, we're going to do some technical analysis, some intermarket analysis to get a good grips on what can potentially happen next. We're going to revisit some of those correlation charts that we talked about in the last video. Revisit that, couple other ones on top of that. I'm going to actually give you an inside look of what the current holdings are, some of the stocks that I'm currently trading, and kind of walk you through my thought process during what's currently going on with market conditions, expected moves, and so much more. We'll talk about a couple signal charts here. We'll go an update on the Sailor to Shift tool, which is, if you don't know, if you're first time here, that's a tool that I use to indicate when to buy and sell crypto. All that and obviously more on today's Stock Market Brief Show. If you're new here, make sure to subscribe to the channel if you like this type of content. Let's go ahead and get into today's show. All right, people, welcome back. So the current chart that we're looking at here is SPY or SPX on the daily time frame. This is the S&P 500 index. We saw a 2% move, which is a large move for the S&P 500, and it happened to be on a Monday. Go figure. Mondays, we've been seeing some really outsized moves. For some reason, they happen at the beginning of the week. Maybe it's because the markets are uncertain. Then we get some news. The market digests it on Monday, and then we settle ourselves in. But overall, pretty big move. And where have we gone overall? Well, we saw a little bit of that shakeout here on the last trading day. This little candle down here is known as an abandoned baby, where you gap down and then you gap back up and you leave this little candle out in the, abandoned. The NDX, the NASDAQ 100, is up 2.39%. Also, some sideways consolidation after seeing a series of higher lows. So not necessarily a bearish thing, but it is just consolidating. Currently, INDU, this is the Dow Jones Industrial Average, was up 1.78%, and it's kind of about to run into this overhead supply that we've once seen prior, and you can see that this can be potentially forming one of them inverse head and shoulders patterns. We'll see what that looks like later, but overall, this one's been lagging a little bit, probably due to Apple being one of its larger holdings, and then obviously some of the healthcare names like UNH, I believe, is in the Dow Jones Industrial Average, and that has obviously been quite sluggish too. IWM saw a little bit of an uptick today at 2.54% as well, and it looks pretty similar to the Dow Jones Industrial Average chart. You can kind of see this inverse head and shoulders potentially forming. But overall, where have we gone in, 10 or so trading days? Pretty much nowhere, just kind of going sideways. Out of the 11 sectors that make up the S&P 500, XLY led the way today, and technology. Go figure, right? Tesla was a big player today, and that really helps that consumer discretionary. It's really kind of made up of really two names, Tesla and Amazon, and those both saw pretty decent days today. Towards the bottom of the list, we had energy and utilities, but overall, all 11 sectors that make up that S&P 500 were in the green. Now, the big news on deck is going to be after tomorrow's close. We have NVIDIA reporting earnings. That's going to be a market moving, or has the potential for sure to be a market moving event. So I'll be posting either on X, or I don't know if I'll be live tomorrow, but I'll be talking about the expected move for NVIDIA's earnings, which I pull near the close of business. On top of that, we do have FOMC minutes coming out at 11 a.m. That's, I believe, Pacific Standard Time that I have it currently set at. And then for the remainder of the week, we do have some core PCE numbers and some personal income, personal spending there on Friday, and some GDP numbers there on Thursday. Now, on the prior video, we talked about the correlations that the 10-year yield has with things like the S&P 500, the NASDAQ 100, IWM, and multiple assets. And we just wanted to point out that on a shorter time frame, they've had quite positive correlations. And well, the 10-year yield, we were kind of expecting it to potentially back off, and what assets to look for to potentially benefit from that. And some of the assets that we mentioned was bonds, so, TLT or whatever proxy you want to use, and potentially healthcare, which that's not on my screen, but that had a negative correlation. Now, 10-year yield backed off since the day we talked about it, which was this kind of reversal candle up here. Actually, I'll just bring up this chart. It was this reversal candle here, followed through. So bonds have been doing quite good these last few trading sessions as the 10-year yield backed off. Now, the markets overall came up higher. Now, this is a 20-day correlation, so you might be saying, well, shouldn't the markets have came down if the 10-year yield goes down? And that's not always necessarily going to be the case, especially on this 20-day correlation. However, we did talk about the dollar, and the dollar actually saw a pretty big, strong move to the upside today. And we also mentioned the correlations that the dollar had with the markets, such as S&P 500 on a 20-day, NASDAQ 100, and IWM, all positive correlations. So this kind of balanced itself out, and the markets ended up going higher, which was obviously a positive sign for those that are along the market. Now, where I find gets kind of interesting here when we're talking about the 10-year yield is looking at oil, right? One of the things that we talked about on the 10-year TNX, how it could potentially come off because oil hasn't been kind of following its path. And oil can be somewhat of a leading indicator of where bonds or yields can potentially go. So as oil was going lower and this was going higher, and then we saw this reversal candle, it seemed like a good opportunity there to take advantage of. Now, the problem here that I have is oil overall has just been consolidating, getting rather tight. And one of the basic principles of technical analysis is expansion leads to contraction. Contraction then leads to expansion. Whether that's to the upside or downside, I do not know. But it is going to be important to kind of pay attention to this. Now, if I'm looking at the correlation that this has with the dollar, actually, surprisingly enough, it has a positive correlation from a 90-day, 120, and 180. It's actually a pretty strong correlation from a longer-term perspective here. From a 30-day basis, there's no correlation coefficient here. And then from a 15-day, it's positive. So with the dollar going up, is oil going to potentially follow suit on that? And that would be kind of interesting. And the reason why I think that's interesting is because if you understand what oil is correlated to, oil is also correlated to energy stocks. And if energy all of a sudden outperforms the S&P 500, well, we know from history that that's not necessarily a good thing, right? Here's the relative strength line of energy and S&P 500. So when this line goes up, it just tells us that energy, the XLE I'm using as a proxy, is outperforming the S&P 500. And when it goes down, that's typically good for the S&P 500. When it goes up, it's typically bad. As you can see, the green line go up, red line go down. This is the S&P 500. You can see that multiple times I've marked it out. In recent trade, energy has been underperforming the S&P 500. And well, look at what the S&P 500 has been doing. So my thought here is we should be paying very close attention to oil's next move and continue to watch that and track that. Because if all of a sudden oil catches a bid and starts moving with a higher dollar from those longer correlations, is all of a sudden energy going to start outperforming the S&P 500 and not necessarily put us in sort of any crash or anything, but does that mean that we might pause and stall out and ultimately lead to what I've been talking about here, the next pain trade, which I believe is the shakeout. Now, I don't exactly know how the shakeout's going to occur. For all I know, it was not today's trading session, but the prior trading session where we got a shakeout to the downside and then it ripped back up. Or is the shakeout going to last a little bit longer where we saw this big rip up? Now people are going to want to get back into that move and then potentially then it's going to come back down and we're going to see some more sideways action, but see larger kind of moves in both directions. And I think that that's ultimately what we could see here. And more importantly, it comes down to, versus making a prediction is how do I position for this type of stuff? And for those that want to know, I don't really short the market all too frequently or various assets. I typically have a focus from the long direction. And the way that I approach it is I look at market conditions. And market conditions, I look at two different factors, and that's the direction of the 5-day moving average, and it's whether we're above or below the gamma flip line. And within that, right, if we're above the gamma flip line and or below, there's different strategies I use. And currently we're going to go through market conditions and you'll see that we're in positive gamma, we're above the gamma flip line, and the 5-day moving averages right now we're more in a yellow, more in a cautionary state. And in this context, I look for long setups that have nice consolidations. So that is the current focus that I'm at. So if I show you exactly the kind of the names that I have on right now, this is just how they perform today. You'll see I actually have quite a bit of different and an array of industries and sectors that are currently on. Now, as the S&P 500, so I want to make this clear, as the S&P 500, because this day we talked about the pain trade coming up to flat year to date. That did that. I was gaining a lot of exposure on this rally. And as we were moving through around this area and here and through here, I began selling pretty significantly those positions. And up until recently, where today, the prior trading session, I began adding to positions because the context of the market, despite whatever bearish case you might see out there, there was a lot of good setups taking place. So my thought process, simply put, was to execute into an array of sectors and industries that have stocks that are consolidating that could lead to an expansionary move to the upside and or downside, but it has very defined risks. And if you actually go in and you look at these specific names, what you'll see is periods of tight consolidation, and you'll probably right out of the gate know where I'd be hiding my stop loss. And obviously, if we expand to the upside, those are some of the names that I can add to. Now, Also, something that's not being shown here is, okay, how big are the positions? And which one's the biggest, which one's the smallest? Well, the majority of these, right, are smaller positions. They're starter positions. I typically get up to and around, 6 to 10% for a full size position. So I'm taking stabs here at about anywhere from 1% to 2.5% on these names. And as you can see, I have this little calculation down here at 36.47. What's that showing you right now is this makes up for 36% of my portfolio. The remainder, right? So let's just call it 40 to make it easy math. 60% is actually in cash. So right now I'm 60% cash, 40% invested, and I'm in names that have a pretty high beta. So for example, today I actually sold, so you're not even seeing all the names, right? Some of the names I actually got out of. So I had Tesla on, like TSLL and stuff like that. That thing was up like 60+% for me. So yeah, I quit. I was selling into it. I got out of it and so forth. So you're not seeing some of the names that I recently exited and some of the new names that I obviously added today, I think, which was Q2. I think I added some lift. I started a lift position today. I took a couple stabs. And these, by the way, you probably, if you're in the Discord, you saw me actually post these as trade ideas. That in fact, the majority of these, if not all of them, were either trade ideas and or mentioned on the stock market brief. That's typically what I do. I just have more of a focus on position sizing. So if you want to look at these names, pull them up, pull up the charts, see what they look like, and you'll start to get a glimpse as to really. Oh, and by the way, TLT also, I did buy that, the day that we were talking about that, and I did sell into that move, some of that today, not all of it, obviously, as I still have it on. And it's kind of what I look at while we're above the gamma flip line, while the 5-day moving average is not necessarily bearish, but we're more cautionary, right? That is kind of the types of trades that I look more into, which are more swing trading based longer term versus being under the gamma flip line, being under a declining 5-day moving average. I tend to do more fade trades and they're shorter term holds. You can see my year to date return right now is about 25%. This is all verified third party by the United States Investing Championship. This is through May. So they only have performance right now through, I believe, April. So if you go there, you can see my performance. I think it's at like 19% through April. Obviously this month for May, I'm up 5 or 6%. Okay. Now I want to continue on. Those are some of the names that I'm looking at. But by the way, this is an all-inclusive list. Remember, I'm only 36% invested, and I posted the tight list, and there's to the Discord group, and I post my watch list every week. There's a lot of names in there that look still really good, and if they continue to play out, my job is to add to more exposure and cut the names that don't work out. So by tomorrow, right? If we see a big move to the downside tomorrow, some of these names might move with the market and I'll just get stopped out, right? And then I'll look for names that are adding that I can add to or start new positions in that are showing strength. That's kind of my approach into this. Now, as the market today has been moving higher, today, Outsized Monday, we started actually pretty much tagging the upper expected move that was implied for the week. It was $12.83. That's a pretty big move. And we still have NVIDIA earnings around the corner. We still have some macro data. So this already was a pretty big start. And, does this mean we're going to break through the expected move again? That would really tell me the market is highly inefficient. And the thing here is the market's move between periods of efficiency and inefficiency. And if we break through it again after 2 back-to-back weeks of breaking expected moves, it's just telling me right now that the market has been rather inefficient and we can take advantage of that in certain cases. But right now, it's one of those warning shots that the market has to kind of stabilize, especially in the very near future here, because this is where those shakeouts, right, what we talked about, kind of occur. This is what a shakeout looks like. If we take a look at SPY on the 15-minute time frame, you can see we're right up there at that upper weekly implied move. Tomorrow's daily implied move, which, by the way, today it started actually gapping out through the daily implied move. And when you see that happen, if the market's that wrong on a daily basis or even or a weekly basis, you can see squeezes. And we definitely saw the gamma squeeze today into and around that upper weekly implied move. So tomorrow's daily implied move brings us up to about 596 to 599. I'm just rounding. And then down back here is also a lot of confluence, right? You have the daily implied zone from 586 to 583, okay, which I'm rounding once again, or 584. But then this is also back to the upper monthly implied move, which we're currently trading outside of. That's also in line with last year's closing price, which obviously acted as a contention level. You can see we broke down from it it acted as resistance, and then we came back up and gapped above it. So we're slightly positive on the year. The SPY, the S&P 500, is slightly positive on the year. Now, another thing that I share in the Discord group on a daily basis is the daily expected moves. So if you want the exact levels for these products, here you go. I'm going to share it with you today. This is already posted into the Discord, but here you go. Screenshot it. You have upper level, lower level, and I even include the 2 standard deviation levels. And then I also started to include this is based off of my eyeball range indicator. This is giving me an implied move based off of implied volatility for the Mag 7 stock. So you have your daily implied move, upper level, lower level, and your 2 standard deviation levels here, which, by the way, for those that are in the Discord or might be thinking about joining, it's only $9 a month. And then I also want to let you know that I've been working on a additional benefit to be bringing in, but it has been quite the difficult task for me to figure out, but I am excited to share that in the very near future. So stay tuned with that. If you take a look at the gamma flip line, which is roughly at about 5,800, we've been floating in and around that, currently above it. So once again, I look for names that are consolidating and names that I can add to on strength and, take off if they start to break down. So we're currently above that. We're near that JPM collar to the upper edge of it. And you can see when we got up here, we kind of doodle around, we broke from it, we came back in, we doodled back down, we came back up. So it seems as if we're kind of getting pinned in and around this area. There is a call wall right now at 6,000. So if we kind of squeeze higher, it's likely to potentially get pinned in and around 6,000 here. So we're kind of in this choppy zone with quite a few air pockets, meaning gaps kind of in and around us. The next thing that I talked about was the direction of the 5-day moving average for SPY, Q, IWM, and so forth down the list. Seeing a lot of yellow. What does the yellow mean? It's more cautionary. Price is above it, so that's bullish, but it is currently still declining. If we stay up here any longer, this will start flipping up and it'll turn to green, which is obviously a much more positive sign. One of the signal charts I look at is the put to call ratio. I apply a 10-day moving average to it. Right here, when it got down here, we basically said, this is everyone's partying on one side of the boat here, and you could typically go through periods of consolidations and or see pullbacks. As you've seen here, that led to some consolidations and a pullback. I mean, it led to a stronger bear market, but this was the initial warning sign. It doesn't mean that this actually has to happen. Then over here, you can see, right, we led to this sell-off. It's not going to tell you it's going to be a big dramatic sell-off or just consolidation, but that did lead to that, okay? So where are we now? Well, we're starting to cross back up through it, and what are we doing? Well, we pulled in, we went up. So right now, we're just kind of in this consolidation, shaky out type of period, and I think we just got to continue to be aware that the party is not fully on one side of the boat now, but they're still kind of there hanging out. Maybe a few people left that side of the ship, but yeah. If we take a look at the sailor to shift tool, the buy signal happened over here on this week over here, and then this week was the official trigger as it crossed above the prior week. And from that point, 95,000, we shot up to around 110, and I'm just calling out that it kind of came in. It's still on a buy signal, buy trigger, but it came in just a little bit. In price action, it's rather bullish as we broke to new highs just recently. If I look at it from an absolute perspective on like a daily time frame, we're kind of seeing, steady, strong move up from this trend line, then a consolidation to it, bam, strong move, consolidation to it, bam, strong move, consolidation into it, bam, strong move. Now we're consolidating into it again. So, this trend line's been tested, I guess, 2 times, right? If it takes 2 markers to do a trend line, I guess it was tested here and then tested again here. The more times it's tested, right, you typically can go through periods of longer consolidation if it breaks, but that is something to just pay attention to as price action's been kind of a steep trend line after breaking that trend line. So we'll see kind of what plays there. If I do look at like other things like Ethereum's also consolidating nicely here, selling a buy signal, buy trigger, and that could be an explosive potential one too. It's actually been a while since we got above the 50 EMA from the relative strength line of Ethereum and SPX. And for this to even turn back around, it's been a while. Actually, this is pretty much the first time all year that's been the case. And it's been down, right, since that point. And now we're starting to see some strength there. So it's still on a buy signal, still on a buy trigger. I think there's opportunities in this space, especially various crypto names. But just be aware that the signal itself kind of slowed down just slightly here. I know some people like to front run this. I don't typically do that, but just figured I'd give you an update on that. So we talked about a lot on today's episode. Hope it gave you some insight to what it is that I'm doing right now versus me trying to make some sort of prediction. You get to see an inside look of the type of trades that I take. I talked about position sizing, which is the utmost important on the majority of this stuff, and then market conditions and how I kind of navigate in and around the various factors that I determine as changing market conditions.